And this just in, the state of the economy is about to crash and burn. Or is it? 2022, is it going to be one of the best of years, the worst of years? There's a lot in the economy that's been climbing, and today I'm going to share with you my perspective on 2022, the things that you need to do and the things that you shouldn't.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah. It's one shot, now the future is yours. Go!
Well, many are arguing that 2022 is off to a really nasty start. Literally, we saw one of the worst Januaries for the stock market in a very, very long time. And guess what? My personal cell phone is lit up with all my partners and people around the world literally saying, Kris, should I be pulling out of the stock market? What should I do? It's overdue by 3 years to literally have its plummet. Within 24 to 36 months, it's going to come back. Should I stay in? Should I get out? And today I want to really update you on everything that's happening in the economy, because there's actually a lot of good news, but there's a couple of things you need to be aware of that you need to get out of right now. So today we're going to look at all aspects of the economy, because guess what my job is? My job as an investor is to know where to place money and where to invest it. And you know, I have a track record that when the market's going up, I do really well. When the market goes down, I do even better. That requires me to have some level of understanding of what's happening in the economy. So today I'm going to give you a really broad overview. And then in the end, I'm also going to share with you some of the things I'm very bullish on, some of the things I'm very bearish on. Let's start right now by just talking about this. Earnings are surging across the S&P 500. I get that it's been a rough January, but if you take a look at our history in just the last few years, earnings have shot up. It's actually really dramatic what's happening. In fact, in just the last 2 years, the S&P 500 sales are up 16%, earnings are up 36%, and you know there's got to be a correction, which we might be staring at the beginning of a correction that I've been waiting 3 years for. You have to understand patterns, because as an investor, you always want to run in the opposite direction of everybody else. When everyone is getting excited about one thing, you should be running in the opposite direction. When people are really scared, when there's fear in the streets, when people are running out of one type of investment, that's usually a good time to get in. So if you take a look at what's happening in the stock market, the typical pattern is that every 7 years, on average, it has a reset. It'll lose 20 to 35% of its value. But within 36 months, it always comes back to its previous placement holder. So when the market's down, that's actually a good time to deploy some of this cheddar and then just wait for that magic moment where history repeats itself. Despite everything that's happening in the economy right now, especially inflation and wages rising, check out earnings. They're literally starting to hit some of their ultimate peak highs for the top 500 companies. And yet, if you look at the labor market, look at some of the interesting trends that we're finding. You've got maximum number of job openings right now, and yet you've got people that are quitting their jobs at all-time high, even though layoffs are at an all-time low. In other words, the people that are looking for jobs, they're being picky and choosy, saying, we get it. It's a hot job market. There's a lot more jobs, and I'm going to take my time and I'm going to find the perfect offer. Of course, there's been a lot of fear in the economy the last 2 years because of the pandemic.
Be afraid. Be very afraid.
And a lot of people, when there's fear, they hold on to their money. What does that actually mean statistically? Well, right now it means that there's cash everywhere in the market from our previous low. There's 4.6 trillion money in the market funds. There's 17 trillion in bank accounts, which is up 33% than 2 years ago. On top of that, take a look at the debt service ratios. We've got Americans that are paying off their debts, and yet their net worths are soaring higher than ever before because they've been holding on to that cash. They haven't been spending it. You know, with the pandemic came a fear. The government has put a moratorium on all sorts of debts because Americans are not able to work. What does that mean? Does it mean that we're going to build up a glut of foreclosures? Does it mean that we're going to have a lot of homes going back to the bank? Actually, that hasn't happened. Right now, we've got debt delinquencies. They're even lower than pre-pandemic times. And on top of that, the wealthiest 50% have stockpiled loads of cash like never before because they have not been putting it out, placing it. They haven't been investing it. Cash balances are 4 times higher than pre-COVID. 65% of all the cash in checking accounts is held by the wealthiest 10%. And in the fourth quarter, JP Morgan increased loans by 6% and deposits by 17%. Wells Fargo, they increased loans by 4% and deposits by 12%. What does it mean? It means that right now, a lot of people are sitting on a lot of money, net worths are high, home values have gone up. And so right now, people are starting to get excited about the possibilities of what they can be doing with that money. That means that people have money and they're waiting to deploy it for the right things. Right now, they're just holding on to cash. They're keeping it really safe and they want to know, how's this going to play out? I think a lot of people want to know what's going to happen with mandates. People want to know what's going to happen with governments all around the world. And are things going to ease back? Are we going to get back to some type of normalcy? Well, here's where we're not seeing normalcy. And that is in the number of houses for sale. It is spiking right now. And we have this ultimate shortage. In our entire history, we have never recorded more than 4 million missing homes. And if builders build at the fastest rates possible, it could take 7, 8, 9, or even 10 years for that market to come back before it could actually experience some kind of downfall. If this is the beginning of the stock market taking its downturn, please understand that only 2 out of 5 recessions, there's a correlation from a drop in the stock market and the real estate market. This will not be one of those. You will likely see the real estate market go up while the stock market comes down. And that relationship has a lot to do with the 7% inflation number that's been released. 7% inflation. I want you to think about this for just a second. Let's just say that that number keeps going up. If it's 7 now and it's maybe 8 or 9 next year, and it takes 4, 5, 6, 7, 8 years for this to correct itself, then that could compound to you literally losing half the value of your money in your bank account. So if this is the buying power that you have in your bank today in 5 years, it could feel like that. So that means that 401ks, IRAs, the stock market, where that money is held liquid, guess what? It's losing value rapidly. But why is net worth soaring? Because it's tied to home ownership. And right now, if you've owned a home in the last 2 years, you've seen that it might have gone up $50,000, $100,000 or more. So net worths are going up, the value of your dollar is going down. That means that in the next 5 years, and maybe even the next 5 days, and maybe the next 5 minutes, you should consider reallocating some of those soft accounts, money in the savings, money that you have in 401ks and IRAs, and depositing into hard assets like real estate. For that matter, take a look at inflation through history. We've got some bumps and bruises that we've experienced along the way, but nothing like we're experiencing right now. Where you see real estate soaring is because of this amazing correlation with what's happening with inflation. Real estate does remain today the #1 hedge. Now, there's a document here called Krohn Consortium. There's a copy right here that I put in the mail for everyone that wants a free copy. There's a link below. And in it, I actually talk about what's happening in the economy and what I think you should be doing. So let me be very specific right now. If you knew that your dollar was going to lose potentially half of its value over the next 5 years, what would you want to do? Well, you'd want to put it in a hard, tangible asset, which is what real estate is. Because real estate has the opposite effect. What if instead of losing half of the value in the next 5 years, what if it turned out that real estate doubled or tripled or quadrupled in value? Well, you'd then find a lot of people getting financially hurt that are doing nothing, that are following the old strategies that aren't working. But if you're smart and a subscriber on my channel and you have a chance to actually get into hard assets like real estate, guess what can happen? The absolute opposite. Instead of losing, you actually benefit from this. You actually gain. And that's my strong recommendation for you. You should ask yourself, even if I don't want to become much of an investor, what is the safest place that I should be stockpiling my money? And that game is real estate. Now, this document will actually show you my track record on my last several thousand deals. I've done over $1 billion in real estate investing. I own all sorts of businesses. Right now, as you can see from the charts, now is the time to be an entrepreneur and now is time to be an investor, especially in the game of real estate. And there are ways for you to do that fully, entirely turnkey. You don't have to become a landlord. You don't have to get into a game that you don't understand or one that you don't want to play. Because I've got 2 rules when it comes to finance. Rule number 1 is stay in your lane. Rule number 2 is if you need to be in another lane, partner with someone that has all the experience that you wish you had. In my case, we're talking about 5,000 projects, profitable, who are making loads of money. This goes back to 2008 when everyone was running from real estate and I went into Phoenix and Vegas and Florida. And within 5 years, as the market came back because population kept rising, supporting that supply and demand number, guess what happened? I helped my investors make over $100 million. And guess what? We're sitting on something right now far juicier than that. So if you've ever wanted to make money in real estate, now's your chance. Go ahead, click the link below, pick up a free copy of this, and it'll also come with a complimentary consultation. Talk to my team and say, hey, Kris Krohn on the video promised me a free game plan. I got this thing, I read it, but I want to know, here's my assets. What would Kris do if he were in my shoes? I will give you that answer. And if you like it, I might doing all that real estate investing for you on your behalf. Click the link. I'll see you there. Wait a second, Kris, what are you talking about? You actually help people invest in real estate? Yeah, it's fully turnkey. I mean, honestly, the secret to my strategy is that I don't trust you. Meaning, I've got a team of 200 experts that this is all they do all day long that I trust. And you and I, we partner up, and guess what? They do 100% of the work. So if you want to see what that track record looks like, there's an individual, I took he and his wife, their family, and I follow them on their journey of buying several investment properties. And if you want to know what it was like for them to partner with me, click this link and check out what Ryan has to say.
I am here to deliver the news of how we actually did in the first 6 months of our partnership. Now, you guys remember the goal was to actually see if we could buy 5 homes in our first year, and I said, let's do it in 6 months. But with all of that work, we'd have to have a truly coordinated team.